Hi everyone, my name is Francis. Welcome to ICANN Foundation, where we believe that whatever is taught well can be done. Today we'll be dealing with partnership FET. So if you're at varsity, if you're at college, and then you're struggling with the topic or the subject of partnership, we are here to help you. So without any waste of time, let's just get right on it. So this question was taken from a BCom marketing course. So those who are studying at UNISA, it's also relevant to you guys. Those who are studying diploma in accountancy, it's also relevant to you guys. So here, if you are having any partnership module or partnership subject or topic, uh, I believe this is the right video for you. So, okay, without any waste of time, let's start. So it says the following balances, among others, in the record of MS. So MS are the partners, right? And then and core on 30 June 2012. So I always tell my students that when we are given the end of the financial period, but it's not ending 31st December. So to get the beginning, you take the following month. What is the following month of June? It's 1st July. What is the previous year of 2012? It's 2011. So what is the beginning? 1st July 2012, right? But if the financial year was ending 31st December 2012, your beginning was going to be 1st January 2012. So you treat it like a normal calendar, right? So we are given a trial balance as at 30 June 2012. Okay, we have the profit, we have the capital for M and S, we have the current account which is debited for M, and then for S is credited. So with the current account, the one that is debited, it's unfavorable, but the one that is credited, it's favorable. Why am I saying that? Remember that a current account is an equity, and your equity increases on which side? On the credit side, right? So it means whatever is on the debit side of the current account will decrease your equity account. Okay, I hope you are following. And then we have what? Drawings, right? So it means both partners took something for personal use. And then adjustment number one says partners are entitled. So this is the partnership agreement. This is from the partnership agreement. So it says partners are entitled 8% interest per annum, right, on their capital. And then 6% interest per annum on their balances of their current accounts, right? So with the interest, so whatever is earned by the partners, it's an expense to the partnership, but it's an income to the partners. And then whatever is charged to the partners, it's an expense to the partners, but it's an income to the partnership, right? So I believe when I say it like that, it gets easy, right? So now we end two partners and the interest on capital, right? So the fact that we are earning, it means we are receiving that interest, right? So when you receive, what will happen to your current account? Your current account will increase on which side? On the credit side, because it's an equity, and equity increases on the credit side. But when it's charged, it means now our current account will decrease on the debit side, right? Because now we need to pay that interest back or whatever is charged to us as partners, right? Okay, so now we're going to do the general journal and the ledger and the statement of changes in equity and the statement of financial position where the capital and the current account are affecting our statement of financial position, right? So without any waste of time, let's just go right on it. So we have two partners, which is M and S. And then the first transaction, we're going to deal with interest on capital, right? So remember the capital account for M, it was how much? 40,000, right? And then for S, it's 50. And then remember the percent, it's 8%, right? So, okay, we're gonna say for M, 40,000 multiplied by 8%, you get 3.2. And then for S, you're gonna say 50,000 multiplied by 8%, then you get how much? 4,000, right? So, okay, now the journal. What are we debiting? What are we crediting? So remember the fact that we are earning, the partners are earning that interest on capital. So it means their current account will increase on which side? On the credit side. So it means the current account will be credited. I hope so far so good, right? Now the partnership have to pay the partners that interest on capital. So it means on the side of the partnership, we're gonna debit what? An expense which is interest on capital. So we're gonna do the same thing with partner M and partner S, right? So the journal doesn't change. If the partners earn an interest on capital, it's always like this. And then with the current account, please be specific for which partner. Because if we just said current account, now we won't know if it's for M or it's for S. So we need to be specific if it's for which partner, whether M or S, right? So some students, they like to combine these two interests, but I prefer to put it separately so that you can see specifically which interest is for who and which one is for who, right? And then secondly, what are we having? We're having the 6% interest per annum on their current account. So remember I told you that when the current account is debited, it's unfavorable. So it means that interest will be charged to that partner. But when the current account is credited, it's favorable. So it means that partner will earn the interest. So it means we're going to have two different journals, right? So let's start with M, right? So the current account is 20,000, right? And then it's debited. So now the further it is debited, what will happen to your current account? So remember I told you that whatever is charged to the partners will decrease your equity, right? But on the side of the partnership, it's an income. So it means now interest on current account on the side of the partnership will be on the credit side. Why? Because it's an income to the partnership. And then we're going to debit what? We're going to debit current account because that interest was charged to the partner. So it means that partner is liable to pay that interest on current account because of what? Because of the unfavorable balance that he or she is having, right? Okay, now let's see the calculations. So we have what? We have 20,000 multiplied by 6%, right? Okay, let's see how much are we getting? We're getting 1.2, right? And then let's check for partner S. Partner S is 10,000 multiplied by 6, right? And then how much are we getting? 600, right? So, okay, remember with partner M, it's an unfavorable balance, right? So it means now we're going to credit interest on current account because it's an income on the side of the partnership. And then we're going to debit the current account because now the partner is liable to pay that interest that was charged to him because of the unfavorable balance, right? It's the same as bank unfavorable. So the further you have that negative bank balance, it means now the bank will charge you interest on that negative balance. So it means you need to pay back that interest back to the bank. But when it's favorable, you are earning interest, right? So it means the bank has to pay you your amount together with the interest, right? Okay, so with partner S is having a favorable current account, right? So now it means now on the side of the partnership, they have to pay partner S interest on current account. So the fact that they have to pay that amount, we're gonna debit what? Interest on current account, right? So interest on current account will be debited because it's more like an expense to the partnership, right? And then current account will be created because now the partner is earning that interest based on the favorable balance. So we're gonna credit the current account for S. And then why does your current account increase? On the credit side. Why? Because it's an equity. And then equity increases on the credit side, right? So the reason why I'm repeating this is because repetition versus understanding, and then understanding versus conversion, right? So the more something is repeated, the more you get the idea, or the more you understand it. Okay. So let's move on. Let's move on. So number 2 says now the partnership agreement stipulates that partner S will receive an annual commission of 15% on profit. So remember this adjustment number 2 or additional information number 2. It happened after the first transaction took place. So it means we need to take into consideration whatever happened on the first transaction before we calculate our annual commission for partner S. So now who's receiving the commission here? The partner. So it means what will happen to the current account? Remember, the fact that the partner is earning that commission, it means the current account will increase on the credit side. So it means on the side of the partnership, they have to pay this partner the commission, right? So it means it's going to be what? An expense on the side of their partnership, right? So already I gave you the journal. So, okay, now let's go to the calculation. So remember we have a profit of 53175, right? And then we have those interest that we need to take into consideration. So let's see what are we going to have. So let's see our calculation. So we have 15,175 less 3.2. Remember the 3.2 is for the interest on current interest on capital, and then less 4,000 is also the interest on capital plus 1.2. So remember this 1.2, it's for the interest that was charged to partner M. So the fact that the company charged partner M that interest, it means now on the side of the company, they received that interest on current account. But on the side of the partnership, it was charged. So it means the partner is liable for that interest, right? So that's why it's positive, and then minus the 600 on the interest on current account for S, and then multiply by 15%. How much are we getting? I think we're getting 6. Let's see our calculations. Let's see our 6. So it's 6986, right? So we're debiting commission. Remember, on the side of the partnership, they have to pay that commission. And then we're creating current account because now the partner received or earned that commission. So the fact that that partner received that commission, his or her current account will increase on the credit side because it's an equity. I hope so far so good. I hope so far so good. And then now, the last one, M&S share profits and losses in a ratio to their capital. Okay, so now the ratio is based on their capital contribution. Okay, let's see how we can calculate that. So what are we calculating here? So now we are sharing what? We are sharing the remaining profit or loss, right? So let's hope it's a profit because now the intention of most owners to go into business is to make a profit. Others is to make a difference. You know, we have different reasons, but after all, there must be a profit. When it's a loss, it's something else. So let's see. So they say the ratio, the split of the profit or loss is based on their capital contribution. So M contributed 40,000 and then S contributed 50,000. So just say 50 is to 40 is to 50, right? And then you divide everything by the common LCD, which is 10,000. And then you get 4 is to 5, right? Okay, and then now let's see our remaining profit. So remember, we need to take everything into consideration from the profit to the interest on capital, interest on current account, and the commission, right? Before we share our profit or loss. So remember, this is our profit that we made from the statement of profit or loss or income statement, which is 53175, and then we subtract the interest on capital, right? Because now the partnership have to pay the partners that interest, and then we add the 1.2. Remember, it was when the partner had an unfavorable balance, right? So it means the partner have to pay the partnership that interest, right? And then minus the 600, which is the interest on current account for S, minus the commission, right? And then we get 39589. So now this 3589, the fact that now it's positive, so it means it's a profit. So now we're going to share the profit according to the ratio, which is 4 is to 5, right? So let's see for M. So for M, we're going to take the 39589 multiplied by 4 over 9. Where does the 9 come from? It's from 5 plus 4. So you add the ratio, and then you get your denominator, and then multiply by 4 over the denominator, which is the total of the ratio. And then we get 17,595, which is for M. And then let's see for S, we take the very same amount that we are sharing, 39589, multiplied by 5 over 9. So the denominator should be the same, right? And then we get 21994. Now, what is the general? So when we are splitting a profit, so it means now the partners will receive the profit, right? So the fact that now the partner will receive the profit, remember I told you when the partner receive or earn something, what will happen to the current account? It will increase. On which side? On the credit side. Why? Because it's an equity, right? So it means now my current account is supposed to be what? Supposed to be credited because we are sharing a profit, right? If we're sharing a loss, now your current account is going to be debited because now it means as the partners, we are liable for that loss, right? And then what is the contra account? We use the word appropriation. So appropriation is just a final account or a temporary account that we make to split the profit or the losses. You will see when we do the ledger for it. And I believe after this, it's the appropriation account, right? So I believe so far, so good. So, okay, let's not waste time. and go right to the ledger. So now we have all the calculations, we have all the amounts, we can just cut and paste on the ledger and statement of changes in equity and statement of financial position, you know. So the tricky part is the journal. After the journal, here we just, have to know the principle and all that. So I'm just gonna make the preparation much easier for you guys. So think it this way, no? Whatever the partner end, it's gonna be on the debit side. Or whatever the partner received, it's gonna be on the debit side. Whatever the partnership end or received, it's gonna be on the credit side. So I can say that on the side or on the perspective of the partnership, the credit side, we're gonna record what? The income, what the partnership end. And then on the debit side, we're gonna record what the partnership had to pay or what the partnership, whatever cost the partnership, whether salaries, whether interest on capital, whether, commission and all that, right? Okay, so the first one we're gonna have what? We're gonna have the profit. The fact that now we have net profit at the beginning, which is 5.3, how much was it? 5.3175. Right? The fact that it's a net profit, you're going to put it on the credit side. Why? Because now remember, I told you that income, we're going to put them on the credit side of the appropriation. But whatever the partnership is spending, we're going to put it on the debit side. Right? So, okay, if it was a loss now, so we're going to have that net loss on the debit side. Right? Okay. What another thing that we have that the partners received or earned? Remember, there was that debit balance of capital for who? For M, right? The 1.2. So what happened to the interest on current account? It was credited. Why? Because it's an income, right? So remember I said whatever it's an income, you're gonna put it where? On the credit side. So it means we should recognize what? We should recognize interest on current account for 1.2. And then whatever the partners end, we're gonna put it where? On the debit side. So the partners end what? Interest on capital. So it's for both partners, which is 3.2 and 4,000. And then we have what? We have one partner who received interest on current account because of the favorable current account, right? Remember partner S. It was 10,000, which was on the credit side. The fact that it was on the credit, it was favorable. So you take the 10,000 multiplied by the 6%, which is the rate which was given for interest on current account, you get 600. And then partner S again received what? The commission, right? So we received a commission of 6,986. Okay, and then now after this, it means now we're gonna share our profit. So by just looking at the appropriation account, which side is greater? The credit side is greater. So remember the credit side is an income, and then the debit side is an expense, right? So when your income are greater than the expense, what are you recognizing? A profit or a surplus, right? So the fact that now we are recognizing a profit or a surplus, it means we are sharing a profit. When you share the profit, your current accounts are gonna be on the debit side. But when you are sharing a loss, the current accounts are going to be on the credit side. Please keep that in mind. So when your debit side, which is expense, so when your expenses are greater than your income, what are you recognizing? A loss or a deficit. But now in our case, our income, which is the credit side, it's more than our expenses, which is the debit side. So we are recognizing what? A profit or an income or a surplus, right? So now we need to share that surplus according to the partners. So it means every time when you have a net income or a surplus, you're gonna debit the two current accounts. It depends on how many partners. If it's 3 partners, you're gonna, debit the 3 partners. Okay, so remember we have calculated the amount on the journal, so I'm just gonna show you here, but I'll go back. So, okay, remember it was 17,595 and 21,995. How did we get that on the ledger? Let me just show you here. So remember the credit side is greater. So the greater side will be the balancing figure, right? So 54 and 54 on both sides. So remember appropriation is the final account. So it doesn't have a balance carried down or a balance brought down, right? So your left should be equal to your right, or your debit should be equal to your credit, right? So if you take this 54,375, you less 3.2, less 4,000, less 600, less the commission, and then you get the remaining profit, which was 39,589. And then that 39,589 multiplied by 4 over 9, which is for M, you get this amount, 17. And then multiplied by 5 over 9, you get 21,994. I hope you guys are following. Okay, so now let's prepare the current account for M. So remember M, who's M? M had an unfavorable balance. So it means now the balance of M from a trial balance should be on the debit side, right? So you're gonna have a debit balance. Okay, the fact that there's a balance, it means there should be the interest that is charged to that balance, right? Which is interest on current account. Okay, and then M and what? Interest on capital. So remember the general journal that we did on the first transactions, right? And then is there another thing that account partner M and? So the fact that we shared the profit, so now partner M and that profit, which was 17,595. So remember, where there's a debit, remember appropriation was debited with current account, so it means current account will be credited with appropriation. So where there's a debit, there should be a corresponding credit, right? Where there's advantage, there should be disadvantage. Where there's a he, there must be a she. My class always laugh at me when I say this, but it makes them to remember the double entry. Okay, so now what are we having again? So remember we had drawings, right? Let me open the question. So remember we had drawings, which is 15,000 and 5,000. So now we're going to close off these drawings to the current account. So remember drawings decrease your equity account, right? Drawings do what? Decrease your equity account. So the fact that drawings decrease your equity account, it means even on my current account, my drawings should decrease the equity account. On which side? On the debit side of the current account. I hope you are following. Okay, so by just looking at what we have on the debit and what we have on the credit, which side is greater? So 15, 85, okay, 36. 36,200 on this side. Already this side is 20. So it means the debit side is greater, right? So you're gonna put the total that you have on the debit side on both sides. And then we're gonna calculate what? You take the 336,200, you less 3.2, less 17,595, you get the balancing figure, which we call it balance carried down, right? So balance carried down will be 15,405. So your balance carried down should be your balance brought down for the next financial period, right? Which will be your opening balance. So don't just leave it as balance carried down, take it to balance brought down, right? Okay, I hope you understand the ledger. So remember, whatever was earned by the partner will be on the credit side. Whatever was charged to the partner will be on the debit side, right? So remember, why the balance brought down, it's on the debit side, the 20,000, because it's unfavorable. So the partner have to pay that 20,000. It's the same as your bank on the your bank unfavorable, right? So when a bank is unfavorable, or when you have that negative balance, and then someone send you money, the bank automatically will take out what you owe them, and then you will have the remaining balance, right? So now that minus the negative, it means now the partner have to pay the 20,000 first, okay? And then now let's check the current account for S. So S had a favorable balance. So it means the balance brought down for S will be on which side? On the credit side, right? Okay, let's check. What else did Mr. S earn? Interest on capital, right? Remember first journal. So interest on capital, it was how much? 4,000. And then we had what? Interest on current account, because the current account is on the credit side, so it means it's favorable. Now the partner will earn that interest on the favorable balance, right? Again, this guy earned what? A commission. Remember that commission of 6 something. Okay, and then again, what else we have? We shared what? We shared a profit. So the fact that we shared a profit, it means now the current account is going to increase. But if we shared a loss, it means we're going to have a decrease on the side. So now the fact that it's a good amount or a positive amount, which is a profit. And then now we're gonna credit what? Appropriation account, right? Which is the contra account we use to share the profit, right? Others, they just say share profit, right? Which is 21994. Okay, and then let's see what we have on the debit side. So partner S had what? Had drawings, which is 5,000, right? So we need to recognize the drawings. For that drawings, it's a decrease your equity. We need to decrease our equity on the debit side of the current account, right? Okay, do you have anything for partner S? Nothing. Okay, by just looking at the ledger, which side is greater, obviously it's going to be the credit side. It's not obvious, depend on, but I'm saying obvious based on the information that we have in here, right? So we have 43580. So 43580 minus 5,000, you have what we call a balance carried down, right? Which is the balancing figure. How much is it? 38580. So balance carried down will be your balance brought down, right? So it means the fact that it's on the credit side, so it means it's favorable. And then for M, the fact that it's still on the debit side, it's unfavorable. So it means M need to do something about his debit balance, right? Okay, I believe so far so good. So now let's go to our statement of changes in equity. Okay. So statement of changes in equity, we're just recording the changes that are happening in the equity. Statement of changes in equity, right? So what do we have on top here? So we have the capital accounts, we have the current accounts, we have the appropriation account of the total and the total account, right? Okay, so the first line now, what are we going to have? We're going to have balances at the beginning of the financial period. So remember the beginning, it's 1st July 2011, right? So remember the capital, it was 40,000 and then 50,000. For M, we have a negative or unfavorable balance. So we should show it as negative 2,000 because it was debited, and then favorable balance of 10,000. And then when you add this two, it's 90 plus this 100 minus 2, you get 98, which is the total, right? And then what did we have again? We had a profit for the year. So remember from the ledger, profit for the year, we took it straight to the appropriation account, right? So you're going to have the profit for the year, and then you take it straight to the total column. So it doesn't affect your capital, it doesn't affect your current account, right? It's the net profit for the year. That's where we're going to adjust, and then we share that the remaining profit or loss, right? Okay, now on our transaction, the first one we had what? Interest on capital, right? So interest on capital affected our current account. It was on the credit side. So basically, here's what's happening. Whatever is on the credit side of the current account, it's going to be positive here. And then whatever is on the debit side of the current account is going to be negative here, right? Or I can say whatever was earned by the partner is going to be positive here. And then whatever was charged to the partner or whatever the partner is liable for, it's going to be negative here, right? And then remember appropriation, I told you that on the credit side, which we had 53,175, it's an income side of the partnership, right? But on the debit side, it's on the expense side of the partnership. So the further expenses, whatever expenses due to your profit, they decrease your profit, right? Okay, another thing, what did we have? We had what? We had interest on current account. So remember with interest on current account, the fact that you have a negative balance or an unfavorable balance, it means was charged to M. So the fact that it was charged, it means that interest, partner M is liable to pay that interest, right? But with partner S had a favorable balance, so it means he received or he earned that interest, right? When you take negative 1.2 plus the positive 600, you get negative 600, right? So whatever it's negative, when you add the two partners, on this side will be positive. So for example, 3,200 plus 4, you get 7.2, which is positive. So whatever is positive, when you add both the partners, it's going to be negative on the appropriation. But remember, appropriation account on the debit side we had what? Expenses, and then on the credit side we had what? Income, right? So now on this point here, it means now the income for the partner was greater than the expenses, and then the remaining figure is 600, right? Which is it's an income. Okay, and then we had what? We had a commission, right? So partner S received a commission. So you just say 0 for partner M because it didn't affect partner M, and then partner S. So the fact that he earned, it's going to be a positive amount. And then on the side of the partnership, they need to pay partner S that 6,986. So that's why it's negative, right? And then what do we have? A share of profits, right? So the fact that now we are sharing a profit on the current account, it's positive, but on the partnership, the fact that now that money was distributed or was shared to the partner, it's going to be negative. So if you look at this and you go back and look at the journal, whatever it's minus, it's on the debit side of the ledger for appropriation, and then whatever it's positive, it's on the credit side of the ledger, right? And then lastly, what do we have? Drawings. So remember I told you that drawings decrease what? Your equity account. So we have drawings on the debit side of the current account, so they have to decrease our current accounts, right? And then drawings don't affect your appropriation, and then you put them straight to the total column as a negative figure. So remember, only this, when you add this plus this, whatever you have as positive, it's going to be negative this side. But with drawings, we don't put it under appropriation, we just take it the way it is. So negative 15 plus negative 5, you get negative 20, right? And then lastly, we have what? Balances at the end. So balances at the end, when you add everything vertically and horizontally, you must get the same thing. So right, vertically. So we have 40, we have 50, and then when you add and subtract where there's a minus, you get a negative of 15,405. So remember, why is it a minus? Let me just show you. So remember, we had a balance brought down on the debit side, and then debit side is the minus side. It's unfavorable, right? I hope you still remember that. So even here, it shows that it's unfavorable. And then same thing here, you add whatever is positive, subtract what's negative, you get 38,580. And then appropriation account, remember I said it doesn't have balance carried down and balance brought down. It's a final account that we create to share our profit or losses, right? So it means now we're going to have 0 because your debit was equal to your credit, right? And then here, which will prove that you are mostly correct, when you add the vertical, so when you add 9853, you less 20, you must get 131. And then when you add them horizontally, 40, 50, less 15, plus 38, you must get 131, 175, right? And then I think when you see this vertical and horizontal, you can put a smile on your face. Okay, so lastly, statement of financial position. At the end of the financial period, we know that we just need to record the equity and liability section, right? Okay, and then now we have what? The partner's equity, right? So the partner's equity consists of your capital in your current account. So this one is just cut and paste. So we're just going to take the total for the capital and the total for the current account. So remember, the total for capital, we had 40 and 50, we get 90. And then for the current account, we had 38,580 less 15,405. And then we get 23175. So I believe so far so good. If you have any questions, feel free to inbox us, feel free to go to our Facebook, feel free to send us a WhatsApp on our WhatsApp number, which is 076 488 5485. And then you can send us an email at ican.foundation.sa@gmail.com. You can also like and share our page on Facebook, ICANN Foundation. Thank you, guys.